Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, April 3, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, let's start with putting today in perspective. Market was up a little bit, market was down a little bit, but at the end of the day, Spiders are up by 62 cents. The SPX, or the S&P Cash Index, was up about 5.5 points. It's really not a big day. It's about 0.1%, give or take. She's above the 20-period moving average. Therefore, above all the moving averages, the trend is your friend until the very end. What's that blue trend line? You want to write this down on a sticky note. 515.08, it represents this breakup candle low. Therefore, below that low on daily closes, not an hourly close, not a 5-minute close, but daily closes below that low is giving up the last breakup candle low in the sequence. You're going to run a test of the trend line, which isn't that far from that particular low, and it gets closer as time moves on below the trend line, and there's trouble in paradise. That would be considered a recapture of the trend line in the downside direction. That would be the bear case for more follow-through corrective type situation. You could call the trend line somewhat of an Irene type of number / place. Any change here on the weekly chart? Absolutely not. They're just basically eating time off the clock near the all-time highs from 2 weeks ago, from last week, and this week. So basically, she's running sideways around the highs, above the trend line, above all the moving averages, yet yes, a little bit far from home base. The 20-period moving average is home base. It's the red sloping trend line, and therefore, at some point, we would expect the market to come closer to home base, whether it's eating time off the clock sideways, letting home base creep up the price, or pulling back in a corrective fashion toward home base. Either one of those two and a combination of those two is the likely scenario. However, this is an uptrend, and we do not, I repeat, do not have a sign and or signal of a trend change. However, but wait, there's more. We are in an on-time type of month situation. Write that down, put it on a sticky note. If you haven't done it already, it's not the first time I've talked about it. We're in an important period right now. What does that mean? Well, we have the solar eclipse on Monday. Markets have a tendency to trade up into or down into these events. Well, is the market going to trade up into or down into Monday, or sideways into Monday and then move out of that particular time zone? We don't know yet, but if she's trading down, our antennas are up. If she's trading up, our antennas are up. If she's trading sideways, it's a coin toss. But we're looking for a change in trend. We're looking for a turn. That has to do with the combination of an on-time month. We have an important solar eclipse. There's something else going on about a week and a half, almost 2 weeks later in the markets. From a cycle perspective, there's a lot of stuff going on in April. Check this out. I want to talk a little bit about Disney. There's a method to the madness because I want to morph it into a different conversation real quick. Learning opportunity. Disney had a proxy battle. That culminated today. They had a vote, and Icon lost the battle. Disney won the battle. Whatever you want to call it, it doesn't make any difference. The question is, the market moved because of fill in the blank. Did the market move because Icon lost the proxy battle? Did the market move because of some other reason? My contention, and this is what we had a discussion with, and we do this all the time, but another discussion today in the live room, is what comes first, the news event or the market moves and they plug in the reason after the fact? And that goes back to good news is good news, bad news is bad news, bad news is good news. They always give you the excuse for the movement of the market, whether it's economic data, whether it's earnings. Earnings, we have the example of earnings report comes out, doesn't matter whether it's Disney or Apple or anybody else, earnings report comes up, all of a sudden the stock shoots up, and then 5 minutes later it goes back down and it's trading down First, they like the numbers, and then they have to find a reason why the stock went down, so they tell you the same thing every time. The analysts were digging through the numbers, and what they found was, again, fill in the blank. Here's a hint. Stocks do not trade on what the results were already in a closed out quarter, meaning last quarter. A stock is not going to move up based on the fact that they beat expectations last quarter. What stocks do is look forward, and they tell you what the likely story is going forward. So what Disney is telling you, here's where we circle back once again to Disney, and the reason, or the secondary reason why I brought up this chart to close out this conversation, is because what this chart is telling you about the events, it's not the events dictating price, it's the reverse. I know it's a hard concept to wrap your head around, but what the chart is telling us about the events is that the shareholders or the traders or the investors, whoever you want to call them, they're disappointed and selling the stock because they figured they could get a boost in the stock price if, in fact, Icon won the proxy battle and got his board seats and all that stuff. It's all nonsense at the end of the day. By the way, and here's the rub. Lazy Swing Trader was short Disney over 120. We are short Disney from an entry over 120. This is from the Automagical Algo Swing Trading System. What the system does is provides a watch list so you know what's going to happen. You know what the next trades are that are coming. Then, when a particular stock or ETF or whatever it is at the time hits its entry price, whether it's a short or a long, you get a text alert, you get an email. It's listed on the board in the alert system in the member portal in the Lazy Swing Trader system part. You have the targets, you have the stop, you got everything you need immediately. Not only that, but you knew what was coming because you had a watch list, and the alert system is only going to take something off the watch list that hits its number. You like apples? How do you like dem apples? What about inside the numbers today? Anybody make money inside the numbers? How about the live room? Post it under the video. Let me hear the results. There was money made today inside the numbers and in the live room. Right out of the chute. And of course, what I urge you to do is read the full set of notes. Pause the video. Go back to the charts and double check the work. Today, you can see we have 517.65 as our early pivot. Now, before I show you what I'm going to show you, we started talking about this buy area before the opening bell. I'm talking about the live room. It was posted on the board. You'll see it later. We're talking about it in real time. Some traders in the live room bought the market using the futures, the ES or the MES, in the live room in the pre-market. Now keep that in your mind, and I'm going to show you what I'm going to show you. Here's a 5-minute chart. Right of the vertical is today's activity. The blue line represents the pivot, 517.65. Check that. The green line represents the pivot. This is the way we do it in the live room, 517.65. Now, you could see here low of day was 517.67. 2 pennies is within the orb of the give or take. We all know that by now. But that's not really what I wanted to show you. What I wanted to show you was with the pre-market when I started talking about this at about 9:25 this morning, Eastern Standard Time, about 5 minutes before the opening bell. And there you have it. This is where the traders started buying it up, that were buying the futures. There were some traders that hopped on, certainly, after the opening bell using whether it was futures or options. And you can see the result. Again, read the notes for yourself. Go back and double check the work. About 8 o'clock this morning, we got a post overnight. They were selling them in the overnight a little bit. So we got a pre-market rescue situation going on. So let's talk about the bull case. We have numbers for the bull case, but wait, there's more. They melted down again, so we've got 517.65 or the pivot still on the table. 9:25, what's the program? Pay attention. There's support between 9:17.65 and 5:17. I know I just said 9, it's 5:17. 5:17.65, 5:17. If they were to get below 5:17, then you got the spike the low and rip it back up scenario. They didn't do that, but that was on the board as a just-in-caser. By 9:32, 518.45 is a target and overhead resistance. How you doing? 518.45. You can see, even though they stopped here, the first order of business, and this is what I tell the traders in the live room each and every day, first order of business in support or resistance is they stop going in the direction they're going. The second phase is they either go sideways and build energy for another move higher, a la today, or they retreat back from whence they came. Here, when they stopped, traders were glad they got the base hit exit. Now, what happens from here? What's part of the strategy? Part of the strategy is you take a base hit, put it in your pocket. Why? Because base hits put you in the Hall of Fame. Base hit, base hit, base hit. You never know which ones are going to give you the rocket ride. So therefore, we hold a trailer. Whether a trailer is half the position and then we sell it in two pieces, or sell it one more time, or sell it three more times, anything, whatever makes a trader comfortable, you give yourself, whether it's one more exit, two more exits, three more exits, and look what happens. The market never gave you a chance to sell it, or a reason, I should say, to sell it before they got up to the resistance area. Well, how did we know where the next resistance area was? Funny you should ask. Let's move on. And there's your target for anyone who bought them up to take the ride. The rest is trader's choice. Above 519 on candle closes is the bull case for another leg toward 520 to 520.20. And there's your 520.20, blue line up here. And what happened when they hit it? You could see here, as soon as they hit it in this candle, they had a pretty decent pullback. Did we have short traders at that place? Yes, we did. Scalp with potential. They got their base hit plus. Back above, they go on to the next place. What's the next place? It's all in here. Downside, upside, support, resistance. Read the notes. Go back to the chart to double check the work. 520.90 to 521.25 is an overhead resistance zone. What more could you be looking for in a service that your expectations are that you're provided quality information, you learn, the numbers work, the strategies work, and many, many, many traders are making money as evidence? I'll let you decide. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here each and every day for the members' benefit. What about stocks on the move today? We had four possibles on the board. Tesla and Taiwan Semi didn't hit their objectives. They're off the board. They're no trades. We had Wolf and Intel that did. Let's take a look at those charts. Intel, the number today was 40.89. There was another number lower. They never got there today. It was right around $40. They came into it and they bounced, and then they basically vacillated around the number all day and dripped into the end of the day. No great shakes, but you could see here during the morning rush, the number worked. They just didn't give you a great bounce. How about Wolf? Check out 26.05. Low in this candle, 26.05. Low in this candle, 26.18. And then the short-term rocket ride up about $1 on a $26 stock. That's pretty darn good. That's about 3%, maybe 4% in my book. Came back for another retest. The numbers work. The number worked then, and they took off again into the end of the day. Never know which ones. What's going on over in Camp IWM? Well, we have a little bit of relative strength today, up about 6 or 7/10 of a percent, $1.34 today. To do what? That's right, to recapture the 20-period moving average. Now, the 20-period moving average is nothing other than an average. It's a guideline right now. It's not like support. It's not like resistance. The market's been up and back through it many times. Therefore, it diminishes the importance of it for a tradable event, whether it be a swing trade or a day trade or anything like that. However, we do use it as a guideline, and they did recapture it. Market knows about the 20. Market participants know about the 20, and therefore there's no accidents or coincidences. She recaptured the 20 above all the moving averages. Trend is your friend. What the bulls want to do is get up into no man's land and fill this gap up here above 208. That's really the next order of business. If you find the market selling tomorrow, then below today's low, 202.15 is the new number. That is the current number. That is a good number. Can she get below? Of course, but that's an important place. Getting below, she'll likely fight back to it. Write that down, put it on a sticky note. What about the transports? Folks down at the transportation department, my second favorite market leading indicator next to Camp IWM, that's a number one. But we've got our favorite canary in the coal mine, up 0.7%, 114 points today. Pretty decent day. They filled their gap, like the one we just talked about in the IWM that's not filled or unfilled. They did fill the gap today in the transports. That gap right there. As a refresher course, anything wrong with the weekly chart? No. Uptrending above all the moving averages within the bullish eating time off the clock box. Nothing wrong with the weekly chart. And until and unless there is, that remains the same. Q people, same routine as the transports. Recapture what they lost yesterday, which was the 20-period moving average. Technically, above all the moving averages, trend is your friend, can give it right up tomorrow morning. We know that. But if she stays above, then she goes to run and fill the gap that was not filled today. Came close, no cigar, maybe another attempt tomorrow. What about the financials? If there's anything wrong with the financials, the overall market, or structure of the market, that could be wobbly. However, is there anything wrong with the financials above all the moving averages? Absolutely not. Down 2 cents today. It's a rounding error. It was flat. No change. We can move it along. About Smashmouth, up 40 cents or 90 cents today, 0.4%. Same routine. They haven't changed. They're doing the same thing we keep talking about. This can be considered bullish, a move off the low. And then you have a bull flag pattern. She just recaptured, or she tried to give up yesterday and today, but end of day recaptured the 20-period moving average above all the moving averages. Trend is your friend. And therein lies today's schematic / synopsis. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.